Geopolitical events can make or break your stock market investments. Now you might be wondering, what's geopolitics got to do with the stock market? Well, the answer is quite a lot. You see, the world of finance isn't just numbers and graphs, it's a complex web of politics, global events, and economic trends. And at the heart of this web lie geopolitical events: wars, elections, trade agreements, and policy changes. These events can cause ripples that affect economies and in turn stock markets around the globe. In this video, we'll be exploring this fascinating correlation, breaking down how geopolitical events can impact stock markets and how you, as an investor, can navigate these unpredictable waters. So buckle up as we dive into the intricate world of geopolitical events and their impact on stock markets. First things first, let's define geopolitics. It's a term that's thrown around a lot, but what does it really mean? In the simplest terms, geopolitics refers to the study of how geography, both physical and human, impacts politics and international relations. It's about understanding the chessboard on which the world's powers move their pieces. It's the mountains and rivers that define tactical advantages, the natural resources that fuel economies, and the cultural landscapes that shape national identities. Now, you might be wondering, why does geopolitics matter? Well, it's crucial because it shapes the world dynamics. For instance, the strategic importance of a country's location can influence global trade routes, alliances, and conflicts. The availability or scarcity of natural resources can drive economic policies and international negotiations. And cultural factors can influence a nation's foreign policy objectives and its relations with other countries. But what does geopolitics have to do with economies and markets? Quite a lot, actually. Geopolitical events can have profound impacts on national economies and the global economic landscape. For example, a political upheaval or a sudden change in foreign policy can create uncertainty, impacting investor confidence and market stability. A territorial dispute can disrupt trade routes, affecting supply chains and commodity prices. And a shift in power dynamics can lead to changes in economic policies, with potential ripple effects on global markets. To put it simply, when the geopolitical landscape shifts, it can shake up economies and markets in significant ways. Investors, therefore, must keep a keen eye on geopolitical events, understanding not just what's happening, but also why it's happening and what it could mean for their investments. Now that we understand you may wonder, why should an investor care about geopolitics? It's a fair question, and one we're going to tackle head-on in this segment. Let's dive into the fascinating connection between geopolitics and stock markets. Imagine the global political landscape as a grand chessboard. Each move, each decision, each event is a piece in motion. These moves, big or small, can send ripples through the world economy, and these ripples can turn into waves in the stock markets. Geopolitical events like elections, wars, treaties, or trade disputes can create uncertainty. And if there's one thing markets don't like, it's uncertainty. This uncertainty can lead to volatility, meaning the prices of stocks can swing wildly in short periods. But why does this happen? Well, stock prices reflect the expected future earnings of companies. When a geopolitical event occurs, it can change these expectations. For instance, a trade dispute could increase costs for a company, reducing their expected future earnings, and this could lead to a decrease in their stock price. But it's not just about the direct impact on companies. Geopolitical events can also shape the overall economic environment. They can influence factors like interest rates, exchange rates, and inflation. These factors can then affect the profitability of companies and in turn their stock prices. And let's not forget about investor sentiment. This is the overall attitude of investors toward a particular market or economy. Geopolitical events can sway this sentiment, for better or worse. Positive sentiment can drive stock prices up, while negative sentiment can push them down. For example, when a country's political stability is in question, investors may become wary. They may start selling their stocks, leading to a drop in stock prices. On the other hand, if a country signs a major trade agreement, this could boost investor confidence, leading to a rise in stock prices. As we've seen, the connection between geopolitics and stock markets is complex and multifaceted. It's a game of chess on a global scale. And as an investor, understanding this game can give you a valuable edge. So why should an investor care about geopolitics? Because geopolitics can move markets. It can create opportunities for gains, but it can also present risks. And being aware of these dynamics can help you make more informed investment decisions. As we can see, Geopolitical events can greatly influence stock markets and investor decisions. This is why it's important to keep an eye on the grand chessboard of geopolitics and to understand the moves that are being made, because in the world of investing, knowledge is power. Let's take a real-world example: Brexit. Brexit, the term coined for Britain's exit from the European Union, was a significant geopolitical event that sent shockwaves through global stock markets. It was a decision that took place in June 2016, following a referendum where 52% of British voters chose to leave the EU. So, how did Brexit impact the stock markets? Well, in the immediate aftermath of the Brexit vote, the UK's FTSE 100 index fell dramatically. Investors around the globe braced themselves for an economic shock. Uncertainty was the order of the day, with no one quite sure what Brexit would mean for the UK, Europe, and indeed the world. It wasn't just the UK markets that were affected. Stock markets from Tokyo to New York felt the tremors of Brexit. The ripple effect was in full swing as investors scrambled to reassess their portfolios and strategies. But it wasn't all doom and gloom. While some stocks fell, others rose. Companies that earned the majority of their revenue outside the UK became attractive to investors as the pound weakened. As the years passed and Brexit negotiations continued, markets fluctuated wildly. Every announcement, every delay, every deal and no-deal scenario led to market movements. The protracted nature of Brexit negotiations exemplified how geopolitical events can cause prolonged periods of volatility and uncertainty in the stock markets. However, it's important to remember that markets are resilient. They have a knack for bouncing back. Yes, Brexit caused waves, but competent investors who were able to keep their cool amid the storm could ride these waves to their advantage. So, what's the takeaway from all this? It's simple. Geopolitical events like Brexit can and do impact stock markets. They bring about volatility and uncertainty, but they also bring opportunities. Keeping a close eye on the geopolitical landscape is crucial for investors who wish to stay ahead of the curve. Brexit serves as a striking example of how geopolitical events can sway stock markets. Another impactful event: the US-China trade war. Now, this wasn't just a spat between two countries over a couple of trade policies. This was a full-blown economic face-off between the world's two largest economies, the United States and China. The stakes? Billions of dollars, and the balance of global economic power. As the war of tariffs escalated, we saw a ripple effect across global stock markets. Investors around the world held their breath, their fingers hovering over the sell button. The uncertainty created by this trade war led to significant market volatility, with stock prices swinging like a pendulum, driven by every tweet, every press conference, and every new round of tariffs. Many investors who had portfolios heavy in industries directly affected by the tariffs, such as technology and manufacturing, found themselves on a roller coaster ride. For instance, the technology sector, with companies like Apple and Huawei at the forefront, faced significant disruptions due to the tariffs imposed on Chinese-made goods. But it wasn't just these industries that felt the heat. The trade war also had a domino effect on other sectors. As companies faced higher costs due to tariffs, their profitability took a hit. This led to lower investment in other areas, from research and development to hiring, affecting the broader economy and, by extension, the stock market. The impact of the US-China trade war on investor sentiment cannot be overstated. It served as a stark reminder of the risks inherent in global investing. The fear of potential economic downturns and the unpredictability of international relations can trigger market volatility, making investors more cautious and driving them toward safer assets. The US-China trade war further exemplifies the significant impact geopolitical events can have on stock markets. It underscores the importance of understanding geopolitics when investing, as such events can significantly alter market landscapes and investment outcomes. So the next time you're considering where to put your money, don't forget to check the geopolitical temperature. Navigating geopolitical risks can be a daunting task. Yet it's a crucial part of the investment strategy. Being on the ball with these risks can make the difference between a sound investment and a financial pitfall. So how do we navigate this complex landscape? First off, it's all about being informed. Staying updated with global events can provide insights into potential market shifts. It's not just about knowing what's happening, but understanding why it's happening and how it could impact the financial markets. This is where the importance of comprehensive and reliable sources of news and analysis comes into play. Secondly, diversification is key. Spreading investments across various geographies and sectors can help mitigate the impact of geopolitical events. Remember, not all regions and sectors are affected equally by geopolitical shifts. For example, a political event in Europe may significantly impact the auto industry but have less of an effect on tech companies. Diversification ensures you're not putting all your eggs in one basket and can help balance out any potential losses. Moreover, it's crucial to keep a long-term perspective. Geopolitical events can create short-term volatility in the markets, but it's important not to let this distract from your long-term investment goals. Knee-jerk reactions to geopolitical events can often do more harm than good. Lastly, consider seeking professional advice. Financial advisors can provide expert guidance tailored to your specific needs and risk tolerance. They can help navigate the complexities of geopolitics and its potential impact on your investments. Navigating geopolitical risks isn't about predicting the future. It's about being prepared, staying informed, and making educated decisions. Whether it's a trade war or a Brexit-like event, geopolitical risks are inevitable. But with the right strategies and a level-headed approach, these risks can be managed effectively. Being prepared and informed can help investors navigate the choppy waters of geopolitical risks. Geopolitical events and stock markets are inextricably linked. That's the key takeaway from our journey today. We've delved into the world of geopolitics, its profound influence on stock markets, and how savvy investors can navigate these often tumultuous waters. Understanding geopolitics is not just about keeping abreast of global events, it's about discerning the subtle shifts in power dynamics and how they ripple out to impact economies worldwide. We've examined the impacts of major events like Brexit and the US-China trade war, exposing the underlying currents that can make or break an investment. Navigating geopolitical risks is a challenge, but it's also an opportunity. With knowledge and insight, you can turn these global shifts to your advantage, making informed decisions that safeguard your investments and potentially yield significant returns. So let's not view geopolitics as a threat, but as a tool. A tool that, when wielded with wisdom and foresight, can help us navigate the stock market with confidence. If you found this video informative and want to stay updated on the latest investment insights, remember to like and subscribe to our channel. Until next time, stay informed and invest wisely.